Bloomberg Quint.
For a rich life and a life full of riches. Happy Diwali.
Happy Diwali.
Happy Diwali.
Happy Diwali. Happy Diwali.
Happy Diwali.
Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. It's another muted day of trade for the markets. The Nifty continues to hover around the 10,200 mark and the banking stocks drag the index lower. It's turning out to be a good quarter for cement companies after ACC Ultratech's bottom line has also beat street estimates. Axis Bank falls the most over 2 years. In fact, the second quarter numbers were way below what the street was estimating. And it's a strong listing for Mass Financial Services. The stock lists at almost over 40% premium to its issue price.
Well, Sensex has finally moved into the positive territory, up around 45 points at this point of time. Nifty is close to that, down just 3 or 4 points. If you look at it from day's low, Nifty has already recovered around 50 points in last 1 hour or so. So after the initial selling pressure, there has some buying definitely has emerged at lower levels. You have heavyweights like RIL leading from the front, and when RIL moves above 900, with this kind of volume, you don't really need any other stock to support. But there are some more stocks that you should be watching out for. Mid cap and small cap have also turned positive, so that is good. But if you look at what is happening really to the index stocks, here you have RIL and Power Grid following the 400 megawatt order that they have received. You also have heavyweights like ONGC, Wipro also trading strong, although most analysts were not quite impressed by the quarterly numbers they announced yesterday. Interestingly, in banking sector, you have private banks now quoting strong. Kotak Mahindra Bank, HDFC Bank, IndusInd Bank, HDFC. Well, all these are actually retail-focused banks. So the corporate-focused banks are in bad shape. Axis Bank, ICICI Bank, even SBI. And Yes Bank is an interesting stock here, which is down today. We quoting with a loss of 3%, while this is also more or less a retail-focused bank, but they do have some corporate exposure, and analysts have remained concerned with regard to these exposures for a few quarters now. If you look at the market breadth, we have once again turned positive around half an hour back. Let's look at which are the other stocks. I mean, other than RIL, which other heavyweight has really helped the market? If you look at the contribution, we'll be able to understand that picture. And then we move on to some of the mid-cap movers of the day. So other than RIL, you have HDFC Bank, you have Kotak Mahindra Bank. So banking sector has prominently helped. And that is the reason, because of this buying that emerged in retail-focused banking stocks, that Nifty Bank has also recovered by 100 points from day's low, although it's still quoting weak, still off day's high, but there has been an interesting recovery in banks, mainly private sector retail-focused banks. Let's move on to the mid-cap space now and see which are some of the interesting stocks. Mass Finance, well, that is the strong listing today, which is in fact in the center of attraction. If you look at it now, 671, that's a huge gain of 220 rupees over the issue price. Stock is quoting strong. Even now, no significant supply pressure through the day so far. 63 moons. This stock has been buzzing for a few sessions now, trading strong even in today's session, up by 10%. Locked at the upper circuit for most part of the day. You have Nucleus Software following the strong results that company announced. This stock has moved up by 15% so far. JBF Industries following a newspaper report that there are quite a few interested companies who could invest in this stock, or who could in fact buy it over and lead to a management change. So JBF is up by 17-18%. Future Lifestyle is in talks with Flipkart for an alliance, and also well, on the negative side you have CRISIL. The numbers were not so impressive, so this stock is down 4.5%, close to the day's low when Nifty Bank is actually recovering. And you also have Aries Agro that moved up yesterday on the news of a prominent investor buying into this company today. It has come under some pressure, although it's trying to recover now. It was down 5% when I checked it last, is now down only 2.5%. Navneet.
Well, it's been a great recovery that one has seen in the markets. In fact, Nifty is back above the 10,200 mark, and that was the key thing actually which the markets would be focusing on. But let's shift our focus to earnings. The big number among the Nifty constituents which came out just a while back was Ultratech, and as you saw, the numbers of ACC outperforming yesterday, beating on all parameters, and similar has been the case for Ultratech as well. Let's go across to Nikki Mirchandani, who tracks this sector pretty closely, to check what exactly stood out in the numbers this time around. Nikki?
Good set of numbers in line with, actually better than what we were estimating. Net sales is almost in line with what the Bloomberg consensus was. There is a 20% increase, growth figure that has come in on the net sales front. 6,571 crore is the number that the company registered for this quarter, as compared to 5,457 crore in the corresponding quarter of the previous year. EBITDA has declined by as much as has grown by as much as 11%, which is way higher than what our estimates were. The margins, however, have contracted to 20.6% as compared to 22.3% in the corresponding quarter of the previous year. But this was pretty much in line with estimates. In fact, we were working with the margins of around 18%, so there is a beat coming in here itself. Also, PAT figures for that matter came in, they've declined by as much as 28% at 431.2 crore as compared to 601 crore in the corresponding quarter. Now, we were working with a number of close to 382 crore. Now, let's also remember that this quarter is the first quarter after the acquisition of JP Assets. So we will see a higher amount of depreciation and interest cost for that matter going in the financials of this company, and that's exactly what's played out. Power and fuel cost has also risen for that matter, and cost of materials for that matter have risen. However, there is a change in inventories which have worked in the favor of the operational benefits of the company. Now, if you look, we are looking at a negative figure of around 158 odd crore as compared to 50.57 in the corresponding quarter of the previous year. Also, in terms of capex, there is one more announcement which has come in. The company has said that it has approved an investment of nearly 194 odd crore for putting up a 4 LMT capacity wall care putty plant to cater to the rising demand for this product, and this plant is expected to be commissioned back in Q2 of the financial year 2020 for that matter.
All right, Nikki, thanks a lot for bringing us all those details. But let's head across to Rohit Natarajan, who's an analyst at IDBI Capital and Securities. Hi, Rohit. Good afternoon to you, and thanks a lot for joining us today in Bloomberg Quint. Your first take on Ultratech's numbers. Yesterday, it was a beat for ACC. Today, Ultratech. And if I can read in the press release given by the company, they have clearly said this is the first quarter of operations post-acquisition of JP Associates plant. What have you made of the numbers?
So essentially, we cannot make a like-to-like comparison with the previous quarter or the corresponding quarter last year, because you will have to strip out the JP associate numbers, which clearly at this point in time we don't have it. Plus, we don't even know what exactly the volumes are there, both in JP, Ultratech, excluding JP, as well as the combined operations. So we'll have to wait and watch what the presentation. We usually get a detailed presentation where the volumes will be out. So that could probably throw us more true picture. That is point number one. Point number two, we also need to know the JP Associates, how the cement companies that they have performed or fared well in this particular quarter, because we were estimating a loss in this particular unit. So we will have to wait and watch in what this presentation, how elaborate they can give us and throw more color on it.
Okay. Rohit, if you could tell us that, the EBITDA margin is down from 21.2 to 20.6. Do you think whatever impact had to come on margin has probably already been witnessed in this quarter, and going forward there won't be further pressure on margin on the combined entity, the existing listed entity actually, so to say?
So let me tell you, we were working that the EBITDA per ton could be close to, for Ultratech excluding JP, would be 980 rupees per ton, and in JP units we know that they are working like at somewhere between.
All right, Rohit, I'm just going to take your last point forward. You were saying that we still don't know if the JP at EBITDA level, whatever their plans were taken into consideration, were EBITDA accretive or not. In the press release, I can read that they've written, regardless, the operations of the acquired assets have been EBITDA accretive, and it is saying regardless because I guess the EBITDA per ton or the quality basically of the JP plants were not up to the mark of Ultratech, and they've clearly said they've injected some sort of working capital to bring it at par. Going ahead, what sort of volumes do you expect from the company? I don't know what's been the volume picture for the second quarter. If you have the numbers, do share with us, because not all the plants are operating at full capacity.
So we are working at 13 million tons. So we wouldn't know. We estimate that maybe they said that the ramping up of volumes could be done within this fiscal. So maybe we are anticipating a 75% kind of capacity utilization for the overall entity as such. Excluding JP units, because JP units, the ramping up will take time because you require a lot of waste heat recovery and other such operational level sort of capex to improve the operating profitability per ton. It is unclear for the time being how that is progressing on. So that clarity probably would emerge from the conference call that is scheduled today.
All right, Rohit, we'll leave it at that note. Thanks a lot for joining us today and giving us your view on the Ultratech's numbers, which have been above the street estimates. The stock's seen a positive reaction post the numbers. In fact, let's see now how the Ambuja numbers pan out. Stock actually has cooled off post the numbers. It's currently trading with only almost 0.5% gains. Let's move across and speak to Mr. R. Sri Shankar, Head of Institutional Equities at Prabhudas Leeladhar. Good afternoon, Sri Shankar. This is Navneet, wishing you a very, very happy Diwali as well as a prosperous New Year. I want to start off with a banking question, Sri, since I remember last time when I chatted with you, you were pretty positive on a couple of the private banks. Axis Bank has disappointed the street. What's the way forward now?
Okay, let me also first start off by wishing you a very happy New Year, and the viewers also a very happy New Year. To come to the banking question and the banks per se, Axis Bank yesterday the results announced were a bit of a disappointment. Having said that, our view and our recommendation had been a reduce on Axis Bank with a target price of 495 prior to the results, and we still hold on to the view of a reduce in Axis Bank with a target price of 454 post the results, post the conference call that we attended. So clearly, from our perspective, the banks which has got more of a corporate focus will continue to see the pain. That includes Axis, that include ICICI, and now probably it will extend to even SBI. The way and PSU banks anyway has been in that category for quite long. So we still are optimistic on some of the private banks. We have been on Kotak Mahindra, on HDFC, on Yes, on IndusInd, etc. Our view continues to remain positive. Some of the old generation private sector banks, Federal Bank, South Indian Bank, we remain positive on it. While we still have SBI as part of our top pick, but some of the if I extrapolate the reasoning given in some of the slippages to NPA in Axis Bank as a result of Reserve Bank, the inspection and the divergence in the account classification of NPA. probably we need to expect for the worst from both ICICI and SBI itself. That's the way we look at it right now.
So you mean to say that RBI would have guided other banks also to provide for or reclassify the NPAs on the same lines?
See, it all depends upon, first of all, I'm not sure whether this entire inspection has been uniform across, i.e. it has been happening simultaneously in all banks. If it has not have been happening simultaneously in all banks, probably some people it has got, because if the conference call from Axis Bank itself said they came to know five days back prior to the results or whatever. So if that's the case, then we are not sure what RBI inspection is going to throw out or come into with any new guidance on reclassification of these accounts. If these accounts need to be reclassified, this is with effect from 31st of March 2017. So you could probably see first quarter is already gone. So in case it has not slipped into NPA in the first quarter, then the remaining things has to happen. And even in the Axis Bank call, they mentioned that probably the lead bank has not recognized as an NPA. Only 6% of the total outstanding loans have been recognized as NPA. It's telling you that there is a lot more of surprises to come, or slippages should happen from the corporate book into NPAs. That's what my estimate after listening to the call.
Okay, let's shift focus from banking and talk about Reliance Industries, which single-handedly has managed to bring some recovery in the market, especially for Nifty, which is just about down 11 points. In fact, today's gain, Reliance Industries, almost 4.5%, has contributed nearly 20 points to Nifty. Shri, what's happening in terms of Reliance Industries? Stocks touched its fresh 52-week high today. The numbers were not at all bad. In fact, the telecom operations surprised the street. What kind of target do you guys have on Reliance?
No, off the top of my mind, I can't recall the target that we have on the pricing, but we have an accumulate story on it. But let's be clear on it. They probably are in the best phase of their growth right now in terms of performance. And if the investment in telecom may not be contributing significantly to their bottom line today, but the way they have been able to probably reduce the number of players from 10 to 4 in the entire segment. In any segment, in any market where, any industry where the number of players have reduced considerably, you have seen the remaining players have always gained. That need not happen immediately, but over a period of time. So from that point of view, it still looks good. And it's there in a period wherein you have seen the best of performance, be it in terms of GRMs, be it in terms of the spreads that they have in terms of various petrochemical products, and also things beginning to happen in the telecom side.
So you have an accumulate rating on RIL. What's your rating on Bharti and Idea?
Yep. We don't cover that.
Still, I mean, after looking at the Reliance numbers, Reliance Jio numbers in particular, you haven't yet changed your view on telecom?
See, as a sector, we don't cover telecom because it was you asked me about Bharti and Idea. I'm saying that we don't cover that sector. We cover Reliance Industries, and telecom is a part of Reliance per se. So we take that particular consensus view on it. Our view, my view on it is effectively reflecting from what our analyst has been of the view that okay, the other part of the business, telecom is one part. You have the petchem business, you got the refining business. All those businesses are doing very well from the GRM perspective, plus from the spread perspective in terms of petrochemical products, and running a good thing. So the assumption was telecom businesses may be losing a large amount of money on a consolidated basis. If that doesn't happen, then things should be much looking better for even Reliance Industries on a consolidated level.
No, what I wanted to ask actually is that you have not been tracking telecom because you didn't see an opportunity there. Has that view now changed? Would you start maybe covering that sector as well, or no, or you haven't given it a thought as yet?
We will be at some point of time, because earlier that there was nothing happening in the sector, everything was negative probably. So with the changes, obviously we need to have a relook at it. You're right.
All right, Shri, before we let you go, what are your top picks for Diwali?
Now, our topics for Diwali is again is a part of our regular stocks under coverage. Britannia, which has been a part of our topic last year, continues to remain for this year also. Then JK Lakshmi Cement, the stock is down 25% in the current year. We think that's overdone. It is one of the topics for Diwali. And the third one is again a contrarian call in South Indian Bank, which we think the worst is behind them, and you should actually start to see the better things coming in South Indian Bank also. So these are all three Diwali picks.
Okay, Sri Shankar, thanks a lot for joining us. Wish you happy Diwali once again. So Britannia, JK Lakshmi and South Indian Bank, these are three stock picks that Sri Shankar has left us with. Let's go across to Yash Upadhyay now to find out which are the Fab 4 stocks of the day. Yash?
Good afternoon, Pradeep. So we have shares of IT company Nucleus Software gaining the most since November of 2016 after the company came out with a strong set of Q2 numbers. Revenue and margins saw a significant improvement while profit saw an increase of 36% on a quarter-on-quarter basis. We have Power Grid buzzing in trade today after the company said that it has been declared as the successful bidder for a project to set up transmission systems in the state of Bihar. We have Future Lifestyle, which is up around 4.5% on the back of ET reporting that online retail giant Flipkart is likely to acquire 10% stake in the company. Now, mind you, we had Amazon acquiring some 5% stake in Shoppers Stop last month, so some action seen there in the offline retailing space. And lastly, we have JBF Industries. The stock has gained the most since June of 2015 on the back of news that it is in talks with Indorama Group, Reliance Industries and Chatterjee Group for a strategic sale.
All right, Yash, thanks a lot for joining us and taking us through the Fab 4 stocks of the day. Well, the markets are still just about trading in the red. Nifty at levels of 10,216 currently. Almost recovery seen on Sensex, which is down only about 12 points. But the weak point today has been all about the banking stocks. The Bank Nifty is weak, and just to remind our viewers, today is the Bank Nifty weekly options expiry day as well. It's usually on every Thursday, but tomorrow being a market holiday, I'm not talking about the moderate trading, so the expiry takes place today. If you look at the range, as per the options data, it is suggesting that the expiry could take place in that range of 24,250 to almost 24,600. On the upside, there is a lot of call writing which has been seen for out of the money calls in today's session. Let's move on and talk about Blue Dart, a company which has delivered a weak set of numbers for the September quarter. In fact, earlier today, the chief financial officer of the company spoke to us, and he also mentioned the impact of GST on the second quarter. Let's listen into what he had to say.
See, transition to GST impact was there even in this quarter also, because you look at it recently, the new amendment which came in wherein SME sector is now allowed to sell up to 20 lakh without registration. Otherwise, earlier there was no such such kind of things were not allowed earlier. Because every single shipment, irrespective of value, required small players to register in a different state. But now with that change coming in, hopefully that should pave way for better growth. But at the same time, situation is very fluid. So as things pan out and time to come, that will have a reflection on the volume from B2C segment as well.
So that was Blue Dart Management after the Q2 numbers. Let's look at some of the interesting stocks that have been doing well in today's trade. Well, if you look at the banking stocks, there are even the second line shares like Dena Bank, Indian Bank that actually slipped in trade. IDBI Bank was also important. Reason being that most of these second line banking companies have been coming out with high NPAs. Although interestingly, a bank like Indian Bank or a Vijaya Bank are actually better off. They have managed to control their NPAs in recent quarters, so to say. But right now, I think traders are just painting the entire sector with broad brush, so no respite for any of these names. SBI is now down around 3%. So SBI, ICICI, both these banking heavyweights continue to slip, and IDFC Bank, but that has been an underperformer. So IDFC and IDFC Bank, both these stocks have also seen intense selling pressure, quoting at days low with heavy volume. So although Nifty Bank has recovered, but it has recovered only on the back of some of those retail focused banks like IndusInd, HDFC Bank and also Kotak Mahindra Bank. No respite for any of the corporate focused bank, whether PSU or private source.
Well, clearly we've seen that rub-off effect post the Axis numbers come on ICICI Bank as well as State Bank of India. And remember, these are the two heavyweights on both your indices, Nifty as well as Bank Nifty. Couple of other stocks for the likes of MOIL, that's up almost 10% in today's trading session. Besides that, you also got Merck Limited, that's seen gains of almost 7.5% in today's trade. NCC, which is also in the futures and options market, is up almost 5%. And Bombay Dyeing is also doing pretty well today. I think the upper circuit is 5% there. So that's locked in the upper circuit as of now. Let's go across to our guest. Joining us now on the show is Hadrian Mendonca, Senior Technical Analyst at IIFL. Hi Hadrian, good afternoon to you. Thanks a lot for joining us today. Wishing you a very, very happy Diwali. Hadrian, what's the call on index at current levels of 10,220? Would you take any sort of position on Nifty or Bank Nifty considering this is the truncated week?
Yeah, happy Diwali to you and the whole team at Bloomberg Quint as well. As far as the Nifty is concerned, yes, definitely, we may see a little bit of consolidation around these levels. But it is without a doubt Nifty has, broken out from that 500-point trading channel, which it was stuck in the past 2 months now. And mind you, this rally has come without the participation of the Bank Nifty because it has been the biggest laggard in the whole rally. Despite that, Nifty is sustaining pretty well, above the breakout zone of 10,178, and I think these are signs that there is another 300 or 350 point upside on the index for the Nifty from here on. So definitely, stop losses have to be strict around 10,178, 180, and you can definitely play long for a target of 10,300, 10,350 going forward.
Okay, well, today's top stock is definitely Axis Bank, which is quoting with a loss of 8% at this point of time. How much downside do you really see further in this stock?
Yes, the Axis Bank, especially after the results, has actually broken down from this weekly trading channel, which is not a good sign if the overall structure is taken into the consideration. So from here on, because of this very huge bearish engulfing pattern that we have seen on the weekly charts, I think Axis Bank is all set to go lower towards the 440 or even the 430 levels. So any kind of long positions, traders have to be very, very cautious with those long positions. And if someone wants to go short, use any kind of rally to exit your long positions. And especially if you want to go short, you can use those rallies to once again go ahead and start shorting Axis Bank on the upside.
Okay, that's the call coming in on Axis Bank on the charts. Let's also get our another guest on board. Joining us now is Deepan Mehta, member of BSE and NSE. Hi Deepan, good afternoon. Thanks a lot for joining us today. Well, there's been a sharp...
Thanks for having me.
Thank you. There's been a sharp correction which has come in for the banking counters today, and we were just chatting about Axis Bank here, how the stock has seen a sharp correction post its numbers. Does it scare you? Is the worst still left in the banking space? Which is the space that you would prefer to enter? Will it be private or the PSU banking space?
No, I think, private sector banks are clearly to an extent overowned. So whenever there is a whiff of bad news like we saw in Axis's results, there is some amount of selling which does take place. But I think that is transient in nature, and we remain very positive on private sector banks, especially banks which are focused more on retail lending. And, with the exception of private sector banks like Axis Bank and ICICI, we have overweight rating on most of the other banks, right from Kotak Mahindra, Yes Bank, IndusInd Bank, DCB, RBL, so on and so forth. So I think it's a sector which investors should look at investing at corrections. Most of the private sector banks in India are on a secular growth mode at this point of time, gaining market share at the expense of the PSU banks, and clearly benefiting from spread of their own banking network and use of technology. And some of these banks have been able to manage their risk extremely well, and they have adequate capital for growth as well. So our view is very positive on the private sector banks, with the exclusion of ICICI and Axis Bank.
PSUs continue to be a no. Even the corporate focused private sector banks like Axis and ICICI you are not really bullish on. But in case somebody is still holding these stocks, Axis or ICICI, what would be your call? Do you think after looking at the Axis number, it would be prudent to probably exit?
Absolutely. I think if you haven't already switched out of the PSU banks and the corporate lenders like Axis and ICICI, I would say even from these levels it is better to exit from a long-term investment point of view. And I just like to make a slight clarification here that PSU banks, ICICI, Axis, they are good for trading in the sense that there is so much of news flow and noise surrounding these companies, especially the quality of the NPAs and the various accounts, the names which keep on swirling around everywhere. So depending upon the news flow, depending upon which account is being settled, depending upon RBI's regulation, you could have a positive quarter, positive news flow, which may take these stocks up. But these are not for long-term investments. I think they are in stagnation territory. In Axis Bank also we saw the very tepid or rather almost flat growth in net interest income and the core operating profits, which is just completely not desirable from an investor's perspective. So while you may trade in them if you're a good trader, from a long-term core holding investment point of view, it's the other larger banks, HDFC or Kotak or Yes or IndusInd, which should take precedence, and not the likes of PSU banks or Axis or and ICICI.
Let's pull up ITC. The stock's seen some sort of buying coming about in the last 15 to 20 minutes. It's almost trading at day's high, not just up about 2 points, but it's still at a day's high. Hadrian, on the charts, do you see any trade for ITC?
Yes, definitely. ITC is at a very important inflection point actually. And if you see the past 3 weeks, ITC has been consolidating around this 260 to 270 zone. Finally, I think it is time where ITC should take the center stage, and once again we'll see this index heavyweight participating and taking the whole rally forward. So ITC is something that one can really consider accumulating at these levels. The fall has been drastically sharp from 370 odd levels, and now you are getting it close to 270 levels. So I think a heavyweight like ITC, it's a definite buy at these levels. Weekly analysis actually indicating that we may see the stock once again moving towards the 300 odd levels if we have a perspective of 3 to 4 weeks. So it's a definite buy on around these levels.
Hadrian, also Interglobe Aviation has moved up sharply in last 1 hour or so, is up around 3.5–4% now. Any views on this? Do you think there is a long trade here?
Yes, the way the stock has showed a strong momentum with good volumes. Now, volumes, is a very important parameter to look up to. This parameter is actually indicating that we have seen some backup buying happening around these levels. Indigo, if you are a short-term trader, definitely one can hold. But it's very important Indigo, closes above the 1135 mark. That is going to be very crucial for Indigo to look up to. If that happens, then we could see Indigo moving towards the 1170, 1180. Your stop loss should be close to 1120 mark.
Okay, that's the view coming in on Interglobe. The stock is almost trading at a day's high. Deepan, what have you made of the earnings from the cement pack? We've had ACC declaring its numbers yesterday, and just a while back we had Ultratech. Both the companies have beat street expectations. Do you cover any of these stocks, or do you like anything where you would recommend a buy?
Per se, our view on cement is neutral, but certainly ACC's results were very surprising. I think 18% volume growth is fantastic. They had the benefit of base effect as well as expansion going on stream. And ACC, mind you, has been a laggard as compared to the cement companies. Ultratech, of course, also came out with a decent set of numbers. But within the cement space, our top pick is Shree Cement. which has been able to significantly increase its operations in a low cost manner, and have been very sensible as far as location of their plants are concerned, as well as the cost at which they are setting up the new plants. And if you compare some of the qualitative and quantitative aspects, it's the best in class as far as any other cement company globally is concerned. So although slightly expensive valuation, that's the stock that we have preference over. Ultratech, ACC, Gujarat Ambuja, I think they are steady performers. But on the whole, the view on cement has to be neutral. We feel that this is a sector which will grow at best at the GDP growth rates, and our preference is for stocks and sectors which will at least outperform the GDP growth rates going forward. Therefore, our neutral view on cement.
Well, this result season, and NIIT Technologies is another company that's coming out with its second quarter earnings today. The tech major has managed to meet street expectations. Sudhir Singh, the CEO of the company, joins us for more details. Also joining in is our in-house IT expert, Agam Vakil. Agam, over to you.
Hi. Yes. So, well, as we know that NIIT Tech has, produced numbers which are largely in line with street expectations. And Sudhir, thanks for joining us. My first question has to do with your order intake for this entire quarter, which stands at about $122 million. How is it split between US, EMEA, and the rest of the world? And what kind of traction have you seen from the US markets?
The order intake that you referenced, right, $122 million US, is about $12 million higher than the same number for last quarter. And a portion of it, a material portion of it, is actually coming because of the momentum that we see in the US, the specific question that you asked. So the order intake portion, the $12 million incremental that we talked about, a good chunk of it is actually coming from the US market, and we see the spends in the segments that we operate in easing up and the outlook looking good for us.
Besides the fact that it's been a seasonally strong quarter for the entire industry, what factors would you attribute to your expansion in margins, which now stand at around 12%?
The number that you see, the upside that you see in margin, is actually coming, obviously straight out from the fact that the revenue itself has gone up. That's point number one. Point number two, we've been able to hold the SG&A costs also. So we've held on to our cost structures, the revenue numbers have gone up, and it's been a mix of both of these.
You also spoke about a pickup in trends. Can you tell us a little more about your conversations with clients and the kind of trends that you see developing in markets abroad?
So if you look at our numbers, and if I look at the conversations that I've had in the markets and the large deals that we are pursuing, we actually see buoyancy coming back. So we actually see momentum behind us. We've closed one large deal last quarter. We see that large deal momentum picking up from our perspective, from the set of clients and the prospects that we're working with, and the industries that we're working across right now.
Sudhir, as you would agree, the BFS segment specifically has seen a lot of volatility and perhaps a little bit of slackness in demand as well in the previous few quarters. But again, we're seeing growth not only in your company but in some other companies as well. Can you take us through what has been the development with respect to this particular segment?
Overall financials, right? Let's just start with a quick top line. Revenue numbers, the number that we are reporting out, the 4% quarter-on-quarter growth, would be the same if you were looking at it and if you were to adjust it on a currency adjustment basis. So on a quarter-on-quarter growth perspective, you really don't see too many changes that will happen. On a year-to-year basis, if you were to look at the operating profit numbers, we're reporting a quarter-on-quarter growth of about 7.5% and a year-on-year growth of about 4.1%. And that 4.1% is in some ways lagging, largely because of the comparable forex rates same quarter a year back. So that's the impact that you see. But on a Q-on-Q basis, the 4% quarter-on-quarter revenue growth that we've seen, that would largely be the same in constant currency terms as well.
And a final question, Sudhir, is on your three largest segments. And this time I'm going to separate insurance from your banking financial services. That, along with manufacturing as well as transport, each of them contribute to about a quarter of your entire revenues. How do you see the change in mix as we move into the second half of the financial year?
So I would actually parse it into three segments, right? Travel and transport is what we talked about. The BFS minus the insurance piece that you talked about The capital markets piece of that particular sliver seems to have underlying spend growth behind it, so that's a positive news piece for us. Insurance, we see a stable outlook. We are not seeing a material deterioration or a material uptick on the spend levels in insurance right now.
Sudhir Singh, it was a pleasure speaking with you. Thank you very much for your time. Navneet, Pradeep, it's back to you.
Well, thanks, Agam, for all these details on NIIT Tech. Deepan, do you have a view on NIIT Tech or say mid-cap IT in general, because you have seen these companies actually beating the street expectation? You look at Cyient, you look at Persistent, Nucleus Software. What's your call now?
No, we have a view and the view is negative, and just because companies have beaten street expectations doesn't mean that they've got out of the stagnation mode they were in. By and large, I think majority of the results which have come from the technology space, large cap, mid cap, have been flat results for many reasons. It could be slow volume growth, billing pressure, the rupee rate appreciating, and operating profit margins also under stress because of increments and visa costs and so on and so forth. So our view is that this is a sector which needs to be avoided completely. We are in a full-scale bull market where at these levels, if you want to grow your portfolio, you need to be in growth companies which are deliver at least 15 to 25% type of top line, bottom line growth. And we don't think that any of the tech companies, there could be a few exceptions, have the capacity or the potential to grow at 15-20% plus on a reasonably long-term continuous basis. And they were secular growth stories at one point of time, but I think that entire sector has been stagnating and sputtering over the past 2-3 years or so. And there is nothing which comes to mind, which any development or trend which has taken place or is likely to take place, at least as far as we can see into the future, which will change this particular flat trajectory of these companies. So even at these levels, it is better to exit out of the tech companies. We have fantastic profit growth, revenue growth coming through in banks, NBFCs, consumer-oriented stocks, automobiles, and lately we have seen even metals and now cement also maybe joining the list of growth companies, growth sectors. So that's where I think investor focus has to be. And managements within the tech may be feeling satisfied with flat growth, and that may be great for them given the operating challenges and the environment they are present in. But from an investor perspective, any company which is not able to sustain at least 15-20% type of top line, bottom line growth needs to be avoided.
All right, just want to highlight NIIT Tech. Actually, the stock was going up before the earnings. In last 7 trading sessions, it was up almost 10%. So probably what one's watching out in terms of price action today, some sort of profit booking which has come in. Also, it's an F&O counter. There was some sort of long build-up which were being seen in this counter. As you can see, that's the 7-day return up almost 8 to 9%. The margins sequentially have expanded by almost 53 bips. But let's also go across to Kunal Sarogi, CEO and editor at Equity Rush, is joining us now. Hi Kunal, good afternoon. What are your trading strategies at the moment?
Well, a bunch of stocks that have broken out afresh on the charts, and I think those are the stocks that one should trade. First up is Vedanta, which has broken through a resistance at the current levels around 330, 335. It had a resistance which has managed to cross. I see the stock getting to 342 in a hurry. Can be picked up with a stop loss at around 330. The other stock I like is Tata Communications. Again, a breakout that has happened here after a substantial correction. I think the stock can get to 760 very quickly. One should put a stop loss at 710 and go long on Tata Communications.
Okay, so these are the picks from Kunal. Hedrin, what are your picks today?
Yeah, I'll stick with the index away, that is Reliance Industries. We've been pretty bullish on a stock since a long time now, and we have seen another fresh breakout on Reliance. The momentum is clearly on the side of the long positions, and I think one can even go ahead and buy Reliance at these levels. You can keep a target of close to 340, 345 and keep a stop loss close to 890. Whereas the other stock that we are very bullish on is Petronet LNG. This is another stock from the energy space, and I think the momentum over here is also pretty strong. We saw a little bit of slack period in the past 2 days, but then the momentum has once again picked up. Volumes are actually showing backup buying happening in Petronet. So every decline should be an opportunity to enter, and one can keep a target of close to 275 and keep a strict stop loss at 258 levels.
All right, let's just pull up Torrent Pharma. The stock is up for the third straight session. I want the Torrent Pharma futures to be pulled up. There's been a significant increase in terms of open interest. It's up almost 43%. As you can see, the stock's been on an uptrend. Today also, it's gained nearly 4% as of now. But the futures have also seen good amount of build-up. Open interest is up 43%, telling you there has been long build-up which is coming about in this counter in the past few sessions. Kunal, on the charts, would you recommend taking any position on Torrent Pharma at these levels?
Although the breakout on this one happened a couple of sessions back when the stock crossed 230, I think that was the ideal place to have bought this. But I think, and now if you buy it, I think you must put a very liberal stop loss, and that might not be such a great trading strategy. So I'd wait for a correction to happen here. In case the stock were to come down to 235 to 36 levels, I think that, although the long-term trajectory is positive, one should wait for a correction to buy the stock.
Okay, well, that's the call coming here. Well, if you look at some more stocks, Avenue Supermart is an interesting stock today that has fallen 4.5%. Deepan, what's your view on this space? You know, today Futures Group is also in news, and looks like they are planning to enter into some kind of an alliance with Flipkart, like, you know, Amazon has checked into the Shoppers Stop. Is this the future really going forward? Which stocks do you really like in this segment?
I think generally we are positive on the retail sector, and I think clearly consumption is driving growth within the sector, and the sector per se has been, had gone through tough times 2-3 years ago, and the companies which have survived now are definitely thriving. And within the sector, we like V-Mart, usual disclosure, we and our clients are invested, as well as Future Retail, where I think valuations are still reasonable. Other stocks in the sector, be it Avenue Supermarket or Trent or Shoppers Stop, no doubt are good growth stories, good companies, great businesses, but we just feel a bit uncomfortable with the valuations, because as and when growth slows down over there, we could see compression of P multiples over there, and that's the risk which is perhaps not worth taking. But this is a sector, I think, which is growing in size, and it is offering opportunities for especially tie-up with the online business models as well. And it's an exciting sector for an investor also to monitor and track closely, considering that it is still a very nascent stage or small size given the context of the size of the economy. And there's great growth, headroom for growth in the tier 2, tier 3 cities, which have not even seen the benefits of large scale retail formats. So it's a sector we are intuitively very positive on. It's just that valuations need to be reasonable, somewhat of margin safety needs to be present before we take a large scale plunge.
Okay. All right, let's talk about Diwali special series, Saal Mubarak. We managed to sit down with market veterans Ramesh Tamani as well as Hiren Ved. While Ramesh Tamani is betting on sectors that are not focused on technology, and Hiren Ved believes that insurance will be a big play in the times to come. Hear out a slice of that conversation.
I think the biggest threat to global markets is the onslaught of technology. What is happening with automation, Internet of Things, robotic intelligence. I think India as a consumer doesn't understand that. I mean, how far ahead China is of us, how far Germany is in robotics with us. So I want to build a portfolio, because I'm a domestic focused investor, that is somewhat insulated against technology coming and taking jobs away from manufacturing, taking jobs away from so many other businesses, right? So the 4 boxes that I came up with, for example, real estate. Property has some immunity from technological threat. Airlines, again, I don't think the Hyperloop is going to take off very soon, so we have some ability to be there. Some of the food businesses, liquor businesses, quick service restaurants, I think will do well. So you're trying to construct a portfolio. Gaming, entertainment. I think people come to India for its 1 billion consumers, okay? Not for the infrastructure play, not for the steel play, but for the consumer. I mean, that's the centerpiece of these 4 things that I'm suggesting to you. I think they're insulated technologically, and I could use the Warren Buffett test for this. If I buy a basket of these stocks and go away for 10 years, am I confident that they would be better off in 10 years than they are now, as opposed to, say, a steel company, as opposed to, say, an OMC? Probably. So that's what I'm constructing my portfolio that tries to mitigate the risk of technology overrunning these businesses.
Hiren, just one question. We're moving from suave and sexy to something that is boring but has made an advent in India in a big way, and that is insurance. Globally accepted sector, present across, and we have a 35% weightage in the index without having a major insurance play until recently. But the response, because of the valuations, maybe was a bit lukewarm. Do you think this is a space which could actually be a money spinner over the course of the next 4, 5, 6 years? Listed insurance in India?
I mean, without doubt, I think insurance will be a big sector. Having said that, I think I've looked at the numbers and I don't think that insurance penetration in India is as low as what people think them out to be. But I think where the play could be is that the ticket sizes could increase. So, you know, as the wealth effect takes on, and health insurance, I think we're way behind, global standards. I think also the way insurance was sold to people, right? Sure. It was literally pushed down the throat. I think with digital channels coming into insurance, I think you will have, younger people buying insurance, digitally, and therefore you could see early adoption as opposed to people buying insurance in their mid-40s and 50s, or in the later 30s. But I think insurance will be a big sector in India, because I think we're just seeing the onset of financialization. In fact, demonetization had a big role to play, because all the deposits that went into banks gave the opportunity for the bank RM to sell some insurance product, to his customer. Because that was a heightened 60-day period where you had a lot of interaction with the bank branch, and I think that I think will carry on for a long time to come. So I think a day will come when LIC will get listed, and given its size and stature, I mean, it will have to be part of the Nifty and many other companies as well. So I think as far as its representation in the stock market is concerned, near-term valuations, I agree with you, they were fairly expensive. But I think if you take a very long-term view, it will be a major sector that, will be part of the stock market indices.
One thing that I wanted to do away this Diwali is this obsession of what is new that people can bet on. Why do we need to hunt for something new? Why can't we look at something that has been in the formative stage for the last few years and could actually have a run for the foreseeable future? So one example of a theme that you guys believe, each of you believe, is not necessarily new, but has spent some time in the formative age in the last 4, 5, 6 years, and now is ready for a takeoff.
In that box of 4 I suggested, I think airlines and housing, I think they will be important sectors. I mean, the airline industry is just about bursting through its crackers right now. These are, there's a lot of misinterpretation in the last street about what airlines do. They're actually very competitive business with a moat. You can't buy those gates, you can't buy those passenger lists. So these are very profitable businesses. And I think given the scare of how many airlines are going to go bankrupt, I don't think people are going to come and spoil the party. So the next 2, 3, 5 years, I think airline traffic will do very well, as they've already started to do well. And I think housing, housing for all, the first thing we want is a house once we graduate and start our jobs, the smaller nuclear families. So I think housing, nice, stable sector. Market has a lot of disrespect for the real estate sector right now. But I think some of the listed companies are good ways to play that.
Okay, Hiren, you?
I think logistics could be one sector, with GST out of the way. I think that that sector was young. It always showed promise, but I think now the trigger is there with the GST in place. And I think, even if e-commerce has to succeed, you will need to have a very strong logistics sector in India, right? I mean, the length and breadth of this country is just amazing.
Sure.
I know that recently a large FMCG company said that they went into a huddle after the BJP came to power in UP, and they said people usually ask what's your India strategy, and they discussed what's your UP strategy. It's a country by itself. How do you get to every nook and corner? How do you distribute your product there? So I think logistics is where truly value can be added, and I think the enabler is there. I think the size and the scale is there, and the mixing and matching of some of the technologies with the logistics sector. I mean, some of the EV stuff could be tracking your trucks online.
Sure.
The kind of efficiencies that you can unlock in this sector is just mind-boggling.
You can catch more from this discussion all through the day on Bloomberg Quint. Moving on to some more picks on Diwali Day. Deepan, what are you planning to buy on this Muhurat day that would probably last till the next Muhurat or even beyond?
Yeah, well, we have our Diwali picks we have 4 companies. The usual disclosure that we and our clients are invested. The first being Mahindra Holidays. We like the leisure travel business, and I think it's been a steady performer. Multiple sources of revenues and a very interesting business model, and great benefits from operating leverage going forward. The second company is TeamLease. It's a staffing solution company, and with increased growth of services and labor laws also tightening, I think these two trends benefit companies like TeamLease, which are into staffing solutions, and it's a great space to be in terms of growth going forward. The third is Z-Learn, which is into managing preschools. I think it's India's largest preschool chain operator, and I think education is an evergreen business, and again it's bang in the middle of the consumption theme. And the last stock is UFO Movies, which is a play on more and more advertising taking place through digital cinemas in the tier 2, tier 3 cities, and it's a company which is available at reasonable valuations and good growth dynamics going forward. They have some other initiatives also to grow apart from the core business. So broadly, these are the 4 stocks. No doubt they are slightly expensive at current valuations, but we feel that these are secular growth stories, and investors who hold on to them over a long period of time, like 2-3 years or so, should be able to get pretty decent returns in the range of 15 to 25% over a long period of time.
All right, Deepan, we'll leave it at that note. Thanks a lot for joining us today on Bloomberg Quint. Well, just to highlight a couple of stocks from the broader markets, you've got stocks like IFP Agro as well as IFP Industries. Both these stocks have seen good momentum in today's session. In fact, the gains which you're seeing on IFP Agro right now, that's up almost 17 to 18%, have come in just last 30 to 35 minutes of trade. Even IFP Industries is trading with gains of almost 5.5%. Kunal, on the charts, how do these stocks look?
Well, I think they're quite interesting plays on their own. If you look at their chart structures, I think it was after a very, very substantial consolidation that we saw this breakout that happened in IFB yesterday. And the kind of move that we see today, I think it's definitely taken it through a major resistance. The stock is definitely headed higher. It's trading at its lifetime high. So it's hard to put a target here. But I think I won't be surprised if the stock manages to get past 600. And I think for IFB Industries, both of them have got very, very similar trade and should be held on.
Okay, so hold is the call on IFP Industries. Nipun Mehta, founder and CEO at Blue Ocean Capital, joins in now. Nipun, good afternoon. Wish you happy Diwali. And well, first of all, if you could share your Diwali idea, stocks or themes that you would like to invest in.
The team at Bloomberg Quint, and of course, all the viewers of Bloomberg Quint, wish you a very, very happy Diwali. When we look at the markets at these levels, I think, and when you look at it from what it could be potentially over the next year or so, one needs to understand and accept the fact that while indices might offer not the same kind of returns as some of these mid caps would, I think there's a far greater opportunity that is there within the mid cap and the small cap space. One obviously cannot generalize across sectors. When one looks at sectors and themes which could potentially be outperformers, one would probably want to continue to look at metals. I think that's where you've seen a fair amount of traction. I think there's a fair amount of juice further left. The downside could just potentially be the risk to the call, could be excessive Chinese production coming back. Other than that, our sense is the demand-supply mismatch is something that's likely to continue for some more time. So that's one space we believe should be continue to be an outperformer. Autos is another. We're seeing a fair amount of demand continuing across both two-wheelers and four-wheeler space. This again, the risk to the call is the EVs getting pushed by the government faster than over the next few years. So when you look at it from a 1 to 2 year perspective, our sense is the two and four-wheeler space should continue to do well. The commercial vehicle space could be a surprise that could come by. Beside that, of course, the agri-chemicals and specialty chemical space also looks fairly attractive. In certain cases, there are relatively high valuations, but our sense is, given the kind of continued demand mismatch that's coming by, or the stoppage of production capacities in China for at least as far as selectively certain specialty chemicals is concerned, I think that's something that's going to again ensure that the top line growth and profitability is there. But something similar as far as agri-chemicals is concerned, just the domestic demand in certain cases, there are one or two companies which are operating globally. Even there is likely to be that continued demand that's likely to ensure the top line growth. Beside this, of course, cement is something which our sense is to a degree has underperformed over the last year or couple of years. The demand is continuing to pick up. There is that surplus capacity that is there. You are seeing quite a few cement companies where there is underutilization capacity still. So there is that operational efficiency that's likely to come by and contribute to the top line and profitability over the next year or 2 years. So we would restrict ourselves to these 4 or 5 themes to be outperforming over the next year or so.
All right, so those are a couple of themes where Nipun feels they could outperform. But for the day, what is outperforming is are the companies from the power sector, and these are the power finance companies. Let's just pull up Power Grid, PFC, REC. All these stocks have registered a good gain so far. So to say, Power Grid, which is a nifty constituent, is up almost 4% right now, and REC and PFC are also up and about. Hadrian, would you recommend taking any position in any of these counters?
Yeah, definitely. I would actually stick with PFC because the way the stock has shown strong momentum. In fact, it was a surprise the way the stock has, rebounded from this double bottom kind of a formation which we saw happening around 4 days. But it was a complete surprise that PFC has actually held on to that momentum and even built on it. Right now, it is actually approaching its resistance zone of close to 135, 136. But I think this current momentum will surely take that resistance zone out, and we could see short-term targets of close to 145 to even 150 going forward. So a swing trader should definitely go on and buy PFC even at these levels and play for a target of close to 145 to 150.
Okay, and before we discuss the small cap stock of the day, Kunal, if you could quickly have a look at Indraprastha Gas and Mahanagar Gas. Both these gas companies have moved up sharply in last few minutes with good volumes. Do you see a trade here?
Absolutely. I think both of these counters have been in markets for a very long time. And the trade, I think, is in MGL. It's definitely broken out afresh on the charts. It's broken this resistance at 1180. I see it going to 12. But MGL, I think, definitely 1180 is where one should put a stop loss, and 1250, I think, is on the cards.
All right, let's move on to the small cap stock of the day, which is Bharat Wire Ropes. The stock's gone up on high volumes today. Let's go across to Nikki Merchandani to find out what's brewing here. Nikki?
So good order book update out for the company. The company has booked an order of nearly 32 odd crore both from domestic as well as export market in the last 1 month. Also in the previous month, the company has booked an order worth 45 crore. So in short, in 2 months, the company has seen a good order inflow coming in as much as 77 odd crore. This compares with the June figure of nearly 37 odd crore. So that's a good beat coming in the company in terms of order book profile. Just to give you a little background about the company, it's a manufacturer and a distributor of wire ropes and has a market capitalization of around 430 odd crore. In terms of YTD performance, good gains coming in at 36% on a yearly basis. We have seen the stock rising as much as 114%.
Thanks, Nikki, for all these details on Bharat Wire Ropes. To look at some more active stocks at this point of time, we have Gujarat, the mineral, that is GMDC, moving up sharply. 4.5% swing. The stock is up 6% now with good volumes. If you could look at that chart, Hadrian, have you been tracking the stock? Any calls?
Yeah, GMDC. If you if you have a holistic view about this stock, it's a perfect higher top, higher bottom structure that the stock is actually trading in, which means that every decline is turning out to be a good opportunity to enter. Currently, if you keep the declines out, I think the stock is on the verge of a very, very strong breakout on the weekly charts. And with today being the end of the current truncated week, if we close somewhere close to 155, 156, it would actually give a confirmation that the flag pattern breakout has really happened. And from here on, a breakout trader should definitely go ahead and buy this stock at these levels and play for a target of a projected target of close to 165 to 170. Risk reward is also in favor of GMDC, so your risk on the downside is pretty less, that is close to 150 levels, and play for a target of close to 170, 175. So it's a definite buy. GMDC, play the momentum and try and get the returns in the short term.
Well, and the other stock which has been strong in the past few trading sessions is Petronet LNG. The stock's up once again today. Yesterday it was up almost about 4%. Kunal, on the charts, any trade do you see in Petronet LNG? Can one look to initiate a long here or should book profits at these levels?
Well, I think it's got a very similar trajectory. Just like IGL and MGL, I think Petronet too has been going up and it's been in an uptrend. It's trading at a lifetime high level, so it's really hard to say where exactly will it run into resistance. But I think the stock is definitely headed higher. One should stay put and keep trailing stop losses. I think the best place to put a stop loss now would be around 260. I see the stock getting to at least 275 to 80 in the near term.
Nipun, while we have been debating the valuation of financial services companies, Mass Financial, which is the fresh listing today, has gone on to quote at a premium of 45% over and above the issue price. How do you really see this stock? And if you don't want to comment on this particular stock, what's your view on this sector per se?
Well, without commenting specifically on Mass Financial, Pradeep, we've been, despite the valuations, and the valuations certainly do look steep as far as the NBFCs are concerned, but we've been positive on the NBFC space irrespective of this. Clearly, given the fact that when institutions are looking at exposure to financial services or banks stroke financial services, there is that clear under ownership as far as PSU banks are concerned. Correspondingly, the private sector banks are sort of over-owned to a degree. But to compensate for that PSU bank under ownership, I think there's been a fair amount of over ownership as far as NBFCs is concerned, and which is where, despite the anywhere from 5 times 1 or 6 or 7 times price to book, some of these do look reasonably attractive. There could be sideways movement in certain cases, but our sense is the kind of shift of business that's happening or that has happened over the last couple of years, particularly in the retail business, from public sector banks onto NBFCs. And while these banks were grappling with the NPAs, the entire focus shifted more from increasing business to recoveries, and which is the reason this opportunity has been clearly taken up by NBFCs. I think going ahead as well, it clearly appears that the NPA issues is still not over. The PSU banks will continue to grapple with recoveries for some more time. At least some of the initial banking results are showing up stress which continues. The PSU banking results still haven't really come in, but our sense is that there is likely to be that continued strain. recoveries are not really happening to the extent that was anticipated maybe 3 or 4 quarters back. And that's something which will ensure that the NBFC space will continue to have this kind of valuation for at least a few more quarters. I won't rule out anywhere from 4 to 6 quarters before which there is that reverse shift that could happen from higher valuations in NBFCs back onto the PSU banking space.
Well, so far it's another good listing for the markets. Mass Financial, if you look at the issue price to the current price, the gain in market share has been over 1,000 crore and the valuations on trailing basis are definitely looking stretched. But let's see how this counter performs going ahead. Well, it's time to take a look at what the dealing rooms are recommending just one day before the moderate trading. Let's go across to Yatin Mota as well as Darshan Mehta to find out. Yatin, over to you first.
Thanks for that, Navneet. And Mass Financial, you already spoke about that stock. That is one stock wherein dealers are recommending it as a Diwali pick. Of course, the kind of momentum one looks at as far as Mass Financial is concerned in terms of growth, probably the existed valuations look attractive as per brokerages. So Mass Financial is something wherein dealers are initiating buy positions. Of course, Havells also is something wherein dealers expecting strong second quarter earnings. Of course, this time the Lloyd acquisition that they have done will contribute to the profitability. After last quarter they took some hit as far as acquisition is concerned. So that is one stock wherein dealers are initiating some long positions. And finally we have Raymond's. That is one stock wherein dealers are indicating a BTST as far as the Diwali Muhurat trade is concerned. They expect some good trading gains as far as this stock is concerned. Darshan?
See, one of the stocks which is buzzing today is Century Textiles. It's up almost 3%. The buzz that we get from the dealing rooms is that the paper sale division will happen mostly to JK Paper and it's in its final lap. So the street is anticipating an announcement very, very soon. There are two counters in which some of the marquee HNIs are very, very active. Karnataka Bank and Dewan Housing. There is a lot of accumulation that is happening over the next few days. They believe that there could be more traction that is coming in. So these are the counters dealers are talking about. And finally, the last stock that dealers are talking about is Power Grid. It's up almost 4%. Two large FII funds have been actively accumulating Power Grid and other public sector utilities over the past few days. Even today they are very active. Even if you see NTPC today is rather active. So this sector is seeing a lot of accumulation by the FII community.
Well, thanks both of you for all these details. And Saloni Dhanuka joins us to tell us about the key things to watch out for in the next trading session. Saloni, over to you.
Pradeep, BSE and NSE will conduct a special Muhurat trading session tomorrow. The Muhurat trading is conducted to mark the occasion of Diwali and it will be held between 6:30 p.m. to 7:30 p.m. However, the pre-opening session will start at 6:15 p.m. On the economic data front, Japan is to release trade balance data while China is to publish quarterly GDP and monthly industrial production data tomorrow. Additionally, US is to release weekly unemployment claims data. Now, it will remain a key watch given its high correlation with overall health of the economy. For Friday back home, we'll be looking at weekly foreign exchange reserves data, and lastly US Fed chair is to speak at an event in Washington on Saturday. Do keep an eye on this as well.
Thanks, Saloni, for bringing us all those details. Well, the Nifty PSU Banking Index is one of your top losers today. The index is down almost 2.5%, and the biggest loser, in fact all the constituents are now in the red, and the biggest loser as of now is Indian Bank, followed by State Bank of India, Punjab National Bank, you name it, and majority of these PSU banking counters are reeling under pressure. Kunal, if I were to ask you, if somebody has to take a fresh short positions on any of these PSU banking stocks, which one would you choose?
Well, I think there's a clear gap down today in State Bank of India. So if one were to choose one PSU bank to go short on, I think it would be on Dow to be State Bank. This gap opens up a new opportunity to go short. It's called a runaway gap. And if this turns out to be a runaway gap, I think the stock is definitely headed lower. The next major State Bank is only at around 235 levels, which is still 10 rupees away from the current level. So I see a 10 rupee decline at least, but I see the stock going much further lower. So I think one can sell this short with a stop loss at around 250.
Okay, that's the call on SBI for now. If we look at some of the other stocks which have been active in today's trade, the entire banking sector has come under pressure. You have stocks like Dena Bank or United Bank, which have also kind of declined further. So there is pressure across the sector. Anything else if you look at the mid-cap space, Kunal, where you think there could be a short trade in banking or financials?
If you move away from the PSU basket and if you look at ICICI Bank, I think it's some similar chart structure to that of State Bank. There is a gap down here as well, and this again is in a continued downtrend. So I see even ICICI Bank getting to 255, possibly to 250 levels. So there is substantial downside waiting to happen in almost all major bank stocks, with the exceptions of Kotak Mahindra and Yes Bank. I think most other bank stocks have broken support, so there is more downside there.
Okay. Adrian, 10 minutes to go for markets to close. What would you bet on? Would you take any fresh positions?
Yeah, Ashok Leyland is looking pretty stable, at these levels. The stock is slowly and gradually gaining pace, building on to gains each and every day. If you do a trend and a strength, analysis, I think Ashok Leyland is very well placed, where you can go long at these levels. We have seen a fresh breakout on the daily charts, very comfortably holding above its 21-day moving average. So overall setup is actually indicating that Ashok Leyland is more likely to move higher from here on, and we are seeing short-term targets of close to 136 to 138. Whereas on the downside, you should keep a strict stop loss close to the 128, 127 mark.
Okay. Well, Kunal, if you look at it, Century Textiles that Darshan talked about might be buzzing because of some corporate developments. But you also look at Arvind. The stock is also looking strong, closing with a gain of 2.5%. Look at Welspun India. There's a swing of 3.5% over last half an hour to an hour. Do you find something interesting in these 2-3 textile counters?
Well, if you look at Arvind, for instance, it's been in a range for a while. And Welspun India has been in a downtrend for some bit. So it doesn't really merit a buy at the current levels. I think one should wait and watch. Century, of course, has got a trajectory of its own. There are a lot of corporate developments happening there. So I think that's a stock that one could bet on. These are stocks that I think one should best avoid at the current levels.
Okay, that's the call coming in on Century Textiles. But besides that, it looks like it's going to be a closing in the red. But the technical analysts have been watching out for the 10,200 mark, and if the Nifty manages to close above that mark, today is going to be the third straight day that it will support 10,200. But going ahead, let's see if there is any sort of fresh breakout that comes about or not. But in today's session, it's been a sell-off for the banking stocks. The Bank Nifty, where the weekly options expiry is today, is trading above the mark of 24,300. Clearly, this is what the options data was indicating, between the range of 24,250 to about 24,600 on the upside. Hadreen, would you have any trade on Nifty or Bank Nifty specifically, considering next week is also the expiry week for the October series?
Yeah, I'd continue to remain long on Nifty specifically because I think the way heavyweights are actually showing leadership in terms of Reliance Industries, HDFC Bank. These heavyweights are showing pretty strong momentum currently, and I think any kind of decline because of the breakout that we have seen on Nifty should be an opportunity to enter long once again. So I would definitely be long on Nifty and keep a stop loss of close to 10,150 and play for an upside target of close to 10,250 to 10,285 on the Nifty.
Okay, so that's the take on Nifty so far. If you look at some more buzzers, Torrent Pharma is a stock to watch out for. This stock has also given a positive upswing in late trade. Indian Hotels is yet another stock which is moving up with volumes. Diwan Housing, well, the stock moved up yesterday by around 6%. Today again it's up 2.5%. This one continues to move up actually in trade. All set to close near the day's high. Anything that you like, Kunal, among these stocks? Also, there is Delta Corp in the list, which has been buzzing. Graphite India has also moved up today once again.
Well, I kind of like Divan quite a bit, Pradeep. I think that's a very, very powerful chart structure, kind of fresh on the charts, although it faces a bit of congestion around 610. But if it manages to get past, I think if the stock has got miles to go before it finally, the current rally peters out. So I think that's one stock to look at. Graphite, I think, has been on fire for quite a long time. It corrected a bit, but now it's moving up again. Very, very difficult to actually buy into the stock, given that it's had such a vertical kind of run in the last couple of months. So I would give it a range check, but I think demand can definitely be looked at from a buying perspective if the stock were to correct to 580 levels.
Let's also pull up Adani Enterprises. That stock's trading almost at day's high with gains of 4 to 4.5% currently. It'll just come up on your screen. Adani Enterprises is the stock that we are talking about. Yep, it's almost at day's high with gains of 4%. Nipun, do you like this counter? Anything that you would recommend?
Well, we don't track the stock, so unfair to comment on it.
No worries. We'll just take a technical call here. Kunal, on the charts, any view on Adani Enterprises?
I think the stock is definitely a hold. I would really go out and buy it at the current levels, given that the stock has been in a very substantial range. It's been all over the place. But if you look at the structure, I think the stock is definitely headed higher, provided you can hold it long enough. So if you are patient and if you can withstand the volatility it typically displays, I think the stock is headed higher. 160, 165 is possible here in the medium term. One should definitely look to buy and hold Adani.
Nipun, do you like something in infrastructure space? Look at the way Dilip Buildcon has been moving, though the stock is corrected today. Maybe this could be an opportunity to enter. Or look at NCC. The stock remains strong. For last 2 trading sessions, we have seen GVK Power hitting upper circuit. What's your call, really?
Well, Pradeep, I think overall as a sector, it continues to be to reel under strain. I think the leveraging is still continues to be extremely high. Revenues that are coming in, or profitability that is coming in, the accruals are not large enough to be repaying debt, so the interest cost is very high. But having said that, I think there will be that 4 or 5 companies in that space which either have done some amount of reshuffling of their assets, hiving of their assets, restructuring their debt, which is ensuring that the overall debt comes down, the interest cost comes down, and the company could be probably back in the green over the next couple of quarters. Either that or any companies which have already been relatively low on debt and are ensuring that the newer projects that they're bidding for will start contributing in the immediate future. So very limited choice as far as infrastructure space is concerned. We are clearly underweight as far as infra is concerned, but there are those 4 or 5 companies where the balance sheets are strong enough for them to be taking benefit of all the orders that are coming in from either of NHAI or some of the private sector orders that are coming in, which of course are really slow. So very selective, but underweight on infra.
Okay, overall underweight, but some selective picks here and there in the infra sector. Well, it's time now to take a quick wrap of how markets traded today. Navneet?
Well, Pradeep, we're closing today's low with somewhat marginal cuts coming in for the benchmark indices. Nifty closing above the 10,200 mark for the 3rd straight day. So that's some sort of positive takeaway if I have to see the market. Sensex down almost 18 to 9 points, and the pain point throughout the day was Bank Nifty. The tone was set with Axis Bank's disappointing set of numbers, rub-off effect seen for your heavyweight banking counters, ICICI Bank and State Bank of India. The broader markets definitely outperformed the benchmark. You can see, in fact, if you look at the Nifty mid-cap index, that saw some sort of cuts coming about, but the small cap, however, managed to close marginally in the green. Let's also look at a couple of your Sensex constituents. So majority of them, you can see more of red ticks coming on the board, but let's look at the top gainer, the heavyweight Reliance, which managed to recover almost 20 points for Nifty's day's low. So Reliance up almost 5%. Power Grid was up almost 3.5%. 2.5%. Wipro reacting to its numbers today. ONGC and Kotak Mahindra Bank were a couple of other stocks which managed to close the day in the green. On the losing side, goes without saying, Axis Bank was your top loser, down almost 10%, closing almost at day's low now. ICICI Bank down 3.7%. From the pharma pack, you had stocks like Cipla, which was up in the second half of the session yesterday, saw some sort of profit booking coming about. Also, Lupin, Sun Pharma from the same space were down. What also dragged the index lower today, Pradeep, was State Bank of India.
Yeah, and the SBI was not alone. If you look at other PSU stocks like Dena Bank in the mid-cap space, the stock also came under intense selling pressure. Most of these stocks where you have some doubts on asset quality, really, they were trading under pressure today. Religare Enterprises was another interesting stock that came under selling pressure in today's trade. And also, you had Avenue Supermart that saw intense selling after a one-way rally. The stock is now finally coming under some kind of profit booking. And IIT Tech disappointed with the quarterly numbers, so this stock also got punished. On the positive side, Torrent Pharma is another stock that one should look at. And on the positive side, you also had JBF Industries. Actually, this stock ended the day with gains of 17%, very close to today's high on the news that there could be some big investors all set to buy a stake in this company. Nucleus Software came out with strong numbers, so this stock also gained in trade. Mass Financials was the new kid on the block, and well, 45% premium. That's really huge. Successful IPO and grand listing. We also look at GMDC. That is one interesting stock that moved up in today's trade, and also a pair that is gas companies, MGL and IGL, if you could look at, were also quoting strong, especially towards the last hour of trade. Navneet.
Well, clearly, let's see which were the top contributors when it comes to Nifty today. Which were the stocks which dragged the index lower, and which were the stocks which saw some sort of contribution on the upside. So as we were mentioning, Reliance Industries contributed nearly 19 points. The other heavyweight, HDFC Bank, almost with 10% weightage on Nifty, supported the index, contributing 11 points. And you saw some recovery coming for ITC, which recovered in the second half of the session. That stock contributed 8 points. And from the banking pack itself, Kotak Mahindra Bank, another private banking stock which bucked the trend today, contributed nearly 6 points. So the stocks which dragged the index lower are once again the top three are the banking stocks. So the likes of Axis Bank reacting to its numbers, rub-off effects seen for the likes of ICICI, State Bank of India. So if you club all the top three stocks, they drag the index lower by almost 45 points. So let's see how was the market participation today in terms of market breadth. Throughout the day, we've been tracking the market breadth for you. Towards the end, definitely there was more of selling which came about. So almost 3:4 is the advanced decline on NSE which we saw. That's the intraday graph which you saw. In the last 10 to 15 minutes, there was some sort of selling which came about in the broader markets itself. Clearly, declines almost 870 versus 664, which were the advances. Let's look at how the participation was. Well, the turnover was definitely on the higher side. The NSE F&O turnover was almost 11 lakh. Considering today was the weekly options expiry day, that's the reason the turnover crossed the 11 lakh mark today. Pradeep, over to you.
Well, minus 331 on Nifty Bank. I think that was really the focus of the day's trade. But moving on, Piramal Enterprises will raise 7,000 crore rupees over the next few months. The company has announced a QIP close to 5,000 crore rupees and a rights issue of about 2,000 crore rupees at a conversion price of 2,690 rupees per share. Where will the funds be used? Sajit Mangat asked Ajay Piramal. Listen in.
Services, one, we have a wholesale book which has been growing rapidly, which has a good quality. So that gives us the confidence that we can continue to invest in growing this book. So some funds will go towards that. In addition, we have just announced recently the housing finance company, and we will use funds for that. We've also got a fund for stressed assets, so that's another area that we will put in funds.
How much funds would it be for housing finance and stressed assets?
Housing finance will need 1,000 crores and stressed assets $100 million, so 650 crores.
What's happening? Because I think you were working on a couple of stressed assets. You were supposed to close at least 2 by the end of the financial year. Where are we on that?
We are working on many assets. Let's see where so we are working on it. Which we will close, when we will close, is difficult to say at this stage. But yeah, we are working on more than 2, let's say.
In which sectors do you see most of them
We have
coming?
said we will do 7, 8 broad sectors, which includes textiles, it includes steel, auto ancillaries, pharmaceuticals, cement, so we will look at those.
You also said very interesting stuff here, that pharma space is looking interesting. Does the group wants to go into pharma in a big way again?
So actually we are quite big in pharma itself even today.
Not the one traditional
We
pharma.
are not in the domestic. Formulation space. We have a non-compete with Abbott till 2018, and in letter and spirit we will honor that.
And after that you would look at?
After that we'll see.
What about stress assets coming in this space for you?
So most of the stress assets in pharma are not really in branded generic space. They are more in the APIs and also that we can look at even now. That we are allowed to.
All right, let's take some closing comments from Kunal. Kunal, what would be your closing strategy be? I know the markets have shut down, but for tomorrow's moderate trading, what should the call be?
I think the trajectory is definitely and beyond a doubt. I think it's positive. There is no change in that. Although we've seen a bit of a subdued kind of move on the Nifty last few trading sessions, and we've seen a continued decline in Bank Nifty, and that's the only spot of bother on the index. But I think overall we're as good as we can possibly be ahead of Diwali, and I see the markets getting to 10,300, 350 going forward. So one should definitely have a very positive mindset ahead of Diwali.
All right, on that note, we'd like to thank all our guests, and it's a wrap on this edition of Countdown. But stay tuned, Neeraj Shah will be in conversation with Manish Kunwani for the Mutual Fund Show. Stay tuned to BQ Live.